We're back. Borrowers beware. The recent meltdown in subprime is changing the dynamics of the broader lending industry. Credit standards are tightening not only for the weak. How should those with good credit navigate through the tougher mortgage market? Roy DeLoach, Executive VP at the National Association of Mortgage Brokers, says check your credit score and clean it up. Christian Weller, Senior Economist at the Center for American Progress, says it may not be so bad for those with good credit. Okay, let's start with Roy.
Yes, sir.
How can I check my credit rating? I guess I need to know my what they call FICO, right? And then what can I do to clean it up?
Yes, sir. You need to go on. You can go online if you can and pull your credit report. Look through it. If you look for any kind of dings on your credit in terms of things that haven't been paid, things that you don't know about, or things that are there by mistake.
And pay them off or somehow get it straightened out, right?
Yes, call Credit Bureau, get that straightened out, get anything off there you can.
All right, and does it then disappear, or is there a little stain remaining? I mean, how clean do I get?
No, if there are mistakes on the credit report, those will be taken out. If there's payoff that you need to go take care of, those will remain for some time. But in the end, your credit score will go up.
All right, Christian, you don't think it's going to get that bad for good credit risk, huh?
Well, for good credit risk, it probably won't, but that is really only, we're talking a small group of people, higher income earners, well, I mean, in terms of changes, I mean, we're looking at people who have assets, who have incomes. I think the market will be bad for low-income earners. For younger people, it will get harder to get credit. For minorities, it will get harder. But importantly for the economy, it will get harder for small business owners. We already see tightening for small firms in terms of credit standards, but we also see tightening in terms of credit standards for mortgages. And you got to remember, 55% of loans for small businesses are mortgages. So you see it tightening for about 70% of small business financing right now on the bank side as well as on the mortgage side. And it's hard to maneuver around that other than building up reserves, building up credit, doing the right things, paying your bills on time, because ultimately supplier credit will have to take care of that.
Well, that could eventually impact the broader economy because small businesses are the chief engine of job growth.
Well, about half of all jobs are being created on net in small business. More importantly, small businesses are one of the big drivers of innovation and investment. And so if you take back investment access and about 2/3 of their financing, you restrict that a little bit, that can impact investment overall in the economy, and that can have ripple effects in terms of growth and job growth.
Roy, have we seen the extent of the damage in the mortgage market, or is there the chance that it will get worse, that Alt-A money will dry up, and then that actually prime money might dry up?
Well, I think the first focus for us right now is to look at the folks that are going to have their mortgages reset in the next couple of years. That number hits to the over $1 trillion in the next 2 years. The most important thing actually Congress could do to help alleviate those problems that could come is to pass FHA reform. The other thing they could do is extend the mortgage insurance deductibility that they installed last year.
What do you mean extend it?
It was only a one-year program. It needs to be refunded for another year.
All right, I wasn't familiar with that. So, is there any part of the housing market that you think might be affected? Intuitively, I think maybe second homes might be affected. Lenders might get stricter about that.
Correct. Well, in 2005, the National Association of Realtors reported about 30% of all the homes sold that year were second homes or vacation homes. So that could be a problem.
Yeah. All right, gentlemen, thank you very much. Wish we had more time to go into this, but because everyone's affected by this. Christian Weller, Center for American Progress. Roy DeLoach, National Association of Mortgage Brokers. Michelle.
Mark, Blackstone's